stock market goes?
Well, if we want a best indicator to look at, all we have to do is head south and look at Venezuela. We've seen how the stock market has done there, and it is very, very clear that the higher the stock market goes doesn't necessarily equate to a good economy. We know that. But we're being told that the economy is doing well in the US, and some ways it is, perhaps. But what I can say is that as long as the central banks are willing to print money and devalue dollars, the stock market is going to look good. We will probably see the Dow at 30,000. There's no reason why we wouldn't. It's gone this far. Look at what happened March 2009. It's basically been a constant increase in the all the stocks. Looking at it from any angle, different stock markets, they've all been increasing consistently. Throughout 2017, month after month after month, the price was getting greater and greater, beating its records. That's not natural. That's not normal. And what we are seeing now is a bit of euphoria, and that's starting to concern me, particularly since all central banks know that they've claimed that they have to increase interest rates. So that's going to be something definitely to worry about.
So do you think the stock market, it's in this incredible bubble right now? Is that what you're saying?
I don't think we've seen the last of it yet. However, the stock market itself, it's being pushed up by the central banks. And as far as I'm concerned, it can go way higher. It can go 50,000. It can go 100,000. As long as they're willing to devalue the currency, it all depends on what the Federal Reserve wants to do. If they want to have a destroyed US dollar, well, we could see the prices going anywhere. The fact remains is that what do you want to be holding during these inflationary periods? If you see that the stocks continue to rise, you may want to get in there. But personally, for me, I would say that, this is really concerning because we don't know when the Federal Reserve is going to pull the plug.
Now, at the same time that the market's continually moving up, the Fed is raising rates, and they've been raising rates. They're also unwinding. Now, how far can they take this? I mean, right now, what do we have? Europe, they're in the negative territory right now. The Fed is in the positive area of raising rates. And we saw back in 2006, 2007, they raised rates very quickly, and it brought pretty much everything down. And then they started lowering it very, very quickly back down to these low levels that we see today. How high can they get the rates? And if they continually raise the rates, what happens?
Well, ultimately, they've been doing this in the very, very small steps because they know that as they increase them, they have to watch and they have to wait and see how the market will react. So they're doing it the absolute smallest steps they can. And this is, if you think about it, going back nearly 10 years that it took interest rates to go from 0 to, let's say, 1.5. That's an incredibly historic number that people will be referencing for years to come. That this is how long, and this is the serious measures that they had to take in order to get the economy to be alive. And unfortunately, they don't have any room if there isn't another recession. What are they going to do? They're not going to be able to bring it down much further unless they go into the negative. That's what's very concerning. Look, they're at, let's say, 1.5 at this time. Where do they have to go in order to completely collapse the economy? Well, remember how things are interconnected. When we see the Fed funds rate, that's what I think of the core interest rate. Everything is based upon that. So you have mortgages, for example, in real estate that are going to be based on that. We see that the central bank raises rates, immediately the commercial banks will raise rates, or even in anticipation. We just saw that recently in Canada. When they were about to raise rates, they were pretty certain about it. So the commercial banks increased their own mortgage rates. And now we are getting at that point where it's becoming a little bit cumbersome for some people, because they're seeing their monthly expenses and they're right at the edge. They're near bankruptcy, but not quite. Everything is still being paid for and their credit cards are maxed out, but they're still going. Now, interest rates, I've even seen just recently at Davos, one of those technocrats was talking, and he said that if interest rates go to, I believe the number was 2.5%, the entire stock market would crash. I don't know if that's accurate, but I know that we are right at the borderline. And if we would see a rate of, let's say, 2.5%, the mortgage rates are going to be somewhere around maybe, let's say, 6%. People can't afford 6% on their mortgages. It's just not possible. They would feel it right away if they have variable, or they're going to feel it in a few years if they have fixed, because of course they're going to have to roll that over into the next one. A lot of them have taken out home equity line of credits. They're taking out second mortgages, and they think that everything is all fine and dandy, but unfortunately it's not. They're in the max debt, and they're just hoping that everything continues upward. Well, it doesn't work like that. There are cycles, natural cycles, like natural market forces, and the Federal Reserve is not going to be able to print enough money if they don't want to destroy the dollar. They will have to basically concede and let it come down a bit. I don't know why they're doing this anyway, because they know where they're heading themselves, putting themselves right into a corner, and unfortunately they are not going to be able to react in a positive way.
I mean, I think at this point that the central banks, they're kind of stuck, aren't they? Because if they leave everything the way it is, what happens to the economy? Can they keep it at negative rates? Can they keep it at 0%? Can they keep stimulus ongoing forever? I mean, eventually, don't you think something's going to break?
Their biggest mistake was that they didn't start sooner. They were telling us the whole time, look at the stock market, look at the economy, everything's doing well. Meanwhile, we're seeing the pressures that have been building. Why haven't you been increasing interest rates, and why have you kept the balance sheet of $4.5 trillion? Why has this been happening if you're telling us that the market and the economy and everything is fine? Well, of course, we've been lied to there, and of course, many times before that. But what I would say is that there's no possible way that they can resolve the issue. It's pushed up to the level that it has been. I mean, you can track this. Look at the G3 central bank balance sheet. You look at those charts, compare them to the S&P or the Dow Jones or any other, and you will see that they are perfectly correlated. You can even see the G5 plus Switzerland chart. Same thing. Precisely correlated to each other over these years since the financial crisis. It's not a coincidence that has occurred. The central banks have been literally printing money to buy shares. Look around the world. Bank of Japan owns 75% of all ETFs in Japan. They own the debt, they own the stocks, they own everything. Look at what the Bank of Norway is doing. Look at the Swiss National Bank. You can see the ECB. They all have their own programs, but essentially they're all about buying up things that naturally in the market, you would have people, businesses, investors getting in. Well, instead they say, look, we don't need that. We are so smart that we are just going to print money out of thin air, buy up the shares, buy up the debt, buy up the toxic debt, save companies, the CSPP done by the ECB. That's to save all the companies, bail them out without calling it a bailout, even though they're not supposed to be able to bail out companies, but they're doing it anyway. It's a joke. This is a fraud, and it's being propped up. How long it can go for, I don't know. I mean, look at Venezuela. The country is completely destroyed, but it's still around. They haven't officially, had to collapse yet. So it can be sustained for quite some time. I'm very surprised at how long it's been so far.
So let's just say this. If the central banks decide, okay, we're going to stop buying the stocks, we're going to stop stimulus, we're going to start raising the rates, and I'm talking about the ECB, they're going to start raising the rates, the Fed is already raising rates. If they start to do all this, where they're no longer purchasing the stocks, Bank of Japan's not doing it, Swiss are not doing it, and will this allow the everyday retailer to come in and buy all this? Will that happen, or do you see something else happening?
I think if they make it known that they're not going to provide stimulus anymore, that would be a negative impact on the economy, on the stock market. I think that this would have an immediate effect. You would see it on day one. If the ECB, the Bank of Japan, they all came out and said, we're not going to be so quote unquote accommodative anymore. and we're going to start reducing our balance sheet beginning on this day, and they give you specifics, I think that would impact the market right away because the market knows what's going on. They've been feeling this. Look, you can see all of the different indicators that are out there, market sentiment and everything else, suggesting that, how do you feel about this market and are there any concerns and everything else? And you see that they show that everybody is worried. Look at the VIX, however. The VIX is down to nearly all-time lows. I mean, it fluctuates, but you see it at all-time lows. That doesn't make any sense. Then we have the proof that the Fed has been shorting volatility. Everything has been manipulated. We don't know what to believe anymore. So personally, the only reason that this has been allowed to continue on, that it's been hitting records, is literally because the central banks are printing up money, buying shares.
And this is probably why they're kind of stuck because, as you just said, if they stop doing all of this, everything kind of falls apart. So they're trying to do it very slowly, but once again, there's going to come a point where they're going to, raise the rates. Like you said, if they reach 2.5%, if that's the magic number, I don't know. That means things start to really fall apart. People can't buy houses, student loans, auto loans. I mean, you think about it, everything just starts to fall apart. So they're kind of stuck right now. Yeah, they have nowhere to move. That's the problem, and they know it. And I think this is why they're not really doing that much. I wanted to switch over to cryptocurrency because there's a lot of people out there that are interested in cryptocurrency, and we realize that cryptocurrency could be another form of currency outside of the banking system. And everyone is, hoping that this would happen. But what I'm personally worried about is the government, the central banking system taking control of the crypto market, where they took control of the currency market, where they came in, they wrote laws, and they said, listen, you have to use the Federal Reserve note. You can't use anything else. If they come in and they start doing this, saying, okay, yes, crypto's great, the blockchain's great, but this is what you have to do. You have to use the government or the central bank controlled cryptocurrency. I mean, Russia submitted a law into parliament to create a crypto ruble, which would be the crypto that they would use inside of their country. South Korea right now is making people purchase any type of crypto in the banks. You can't do it outside of the banking system. I mean, when you look at the crypto market, where do you see it headed? Is this going to be an open free currency, or do you think the central bank is going to try to control this?
I think many countries will restrict the maximum possible. They will do everything they can. And a lot of people say that they can't, but I definitely believe, we've already seen it, that they will try to do everything in their power. Now, what they can do is they can sever the point in between the banks where you keep your fiat currency and where you can get in and buy into cryptocurrency. So they can block that portion of it, whether it's financial institutions that are sort of in between that. There's ways. But the cryptocurrency itself, of course, can never be shut down. It is decentralized. So this is what people need to realize. Now, there are always going to be countries, as far as I'm concerned, that want cryptocurrencies and will accept it and will be, will say basically, hey, all of you shutting down your cryptocurrencies, you can open up your business here. We want your business. We'll be friendly to you, pay your taxes, and everything's good. And I think that that's what's happening, perhaps with Japan being one of those countries. And there will be others, of course. But I know that this is a time that's very, very early on. And we're just, what we're seeing now is probably just a fraction of what we will see into the future. I do believe that countries do not like cryptocurrencies in general. The only ones that we are seeing is, for example, the petro coming out of Venezuela, my favorite, and as you mentioned, in the ruble as well, going crypto. I think that these will be very limited in their scope and their use, but they will not be challenged by the different cryptocurrencies that are out there today. There are private and there are public ones, and I think that what we will see is the ones like Bitcoin and everything else. Those are where all the money will be. I don't think there's going to be any sort of competition, like somebody's going to invest in the crypto ruble or anything like this. So I think they'll be totally separate. For me, I thought it was weird that a country would want a cryptocurrency to begin with anyway, simply because when you are a central bank around the world, you have ultimate power, you have ultimate control. You don't need to have a cryptocurrency. You don't need security, additional security. You don't need any of that. You have a monopoly. You have the printing press. There's only one legal tender in that particular country, and you're forced to use it. When you have cryptocurrencies, let's say the Bitcoins and all others, you have a limited supply. You have competing currencies because, of course, if I don't like Bitcoin, I can use Ethereum, I can use Litecoin, I can use anything else. If, for example, Bitcoin becomes too expensive, then I'll just use Litecoin. If Litecoin becomes too expensive, I'll use the next one. There's competition there. So I really see it as almost very strange what they have done here. And of course, it's just really early and perhaps they're just interested in all of this. But ultimately, I do see the market gaining a lot more attention. Imagine we are just at the tip of the iceberg for what we will be seeing here into the future with cryptocurrencies. I think that a lot of companies are just going to use them and implement the blockchain on their own types of different, whatever it is, software that they're using or whether it's financial or not. I think they're going to be using it because it's sort of the trendy thing to do ultimately. But definitely the market is gaining more and more attention.
I wanted to switch over to China, and they introduced their petro yuan, and they launched that, and they're allowing countries to use the petro yuan. And there are certain banks saying that, okay, we're going to keep it in reserves, and other countries are saying that, yes, we're going to use the petro yuan. China also announced that they're open to foreign investment. When you look at the petro yuan, is this going up against the petrodollar?
To some degree it is. I mean, I think it's a fraction of, the size and the scope of it all, but we are here at the beginning. This is a very, very new thing, and it will take time to get attention. But when you look at a situation like Iran, for example, this country can't do business the way it used to. There are sanctions on it. So what do you think they're going to do? They're going to be going towards China and saying, hey, let's do business on your exchange using your systems, and I can sell my oil to this country or that country. We can do this through your system. I don't need to deal with those other systems anymore. And that opens up a new market. So it's something interesting. All these countries that are facing sanctions by the US dollar and their hegemony, they may have a new option, a new place to go to. Of course, the market's much smaller, but it gives people an opportunity. Now there's a door open so they can do business this way. We've seen trades before between, I think it was, if I'm not mistaken, Iran and India. It's been a few years now, where they were exchanging oil for gold. There are other methods they can do this, but ultimately they probably would prefer something like this, having their own market. And this is something that's going to allow them to have a lot of money flowing through there. It's going to take some time for it to get developed and everything, but especially for those countries who are facing the sanctions, I think that this is very positive news. And it really does, in a longer term, let's say 10, 20, 30 years from now, really does threaten the petrodollar.
Do you think that China is being set up, and I asked you this way back, do you still think that China is being set up to be a reserve currency?
What I would say about that is not directly. What we would have to look at it probably more realistically is a basket of currencies where the US loses its hegemony being the official leader, and you would have something like the IMF being there with the SDR, and they would have a basket of currencies and the yuan being one of those currencies. I think they may even say that they have a little bit of gold in there backing this as well to try to give confidence to the market. But I don't see necessarily China becoming the de facto reserve currency, at least not in the next few years or even 10 years or so. I mean, if that's going to happen, it's going to be much further down the road. That's my best guess anyway. But hey, nothing would surprise me anytime now. So
now, something really strange happened. Mnuchin came out. He came out and he mentioned something at Davos about the weak dollar. And, everyone, the market went down. Everyone was going crazy. And everyone couldn't understand that the U.S. is taking on this weak dollar agenda here, because it always used to be a strong dollar agenda. Why do you think he came out and he said something like this?
I don't know why, especially at that conference, why they would say something like that. I mean, it's anyone's best guess. in terms of the weakness or strength of the dollar, over time, we've seen the dollar weakening and weakening. However, there have been times where the dollar has seen some strength. But when we compare it to real goods, what the average American is paying for their electricity, for their food, for their rent, things are increasing in dollar terms. What does that mean? Does that, let's say that Apple, does that Apple really, is it any different than it was 50 years ago? No, but of course it costs more dollars to buy. And that's, as far as I'm concerned, a weak dollar policy, and that is the Federal Reserve's overall policy. If you just take what their official policy is and flip it around, take the reverse, that is their official policy. Of course, they say that they want to protect the value of the currency. They want to be able to, encourage price stability and everything else. But of course, it's the opposite. It is quite the opposite. And that is their policy, and they've been doing that. And as far as I'm concerned, that will continue on into the future. I don't know why Trump would have said strong dollar instead when others clearly point to the fact that they're just going to continue on with a weak dollar in a longer term perspective, of course.
Well, do you think when he said that, we know that the dollar's been losing value, but do you think when he said that, do you think that they were going to devalue it even further? And if they did devalue it even further, wouldn't that affect, like you said, the prices of goods here in the United States? It would help our exports, but wouldn't it make everything else go up dramatically if they actually started to really, really weaken the dollar? What effect would that have on the stock market? On pensions, on people purchasing retail? Think about it. If they weaken the dollar and they use that and they actually pushed it down, how would that affect the economy?
I think that, as you said, for exports, it might be good, and potentially that's what they're going for. Maybe they want to be able to repatriate those tax dollars. They want to invest in manufacturing and be able to build things and ship them out. That's totally speculative on my part. I don't know. But whenever they do devalue a currency, look what Switzerland did. They said, financial crisis hits, and around the world, investors are looking for places to park their money. So the Swiss franc starts to rise and rise. And they said, oh no, okay, our currency is too strong. We're going to have to devalue it. And that shows you what these countries are really willing to do. They will devalue their currency because it's too strong. So any country is willing to do this. And I think the US is not the only one that's going to do this. They're all in a race to the bottom. China does it. Everybody does it. They all print money in order to devalue. Whether they're going to ramp that up, I don't know. Will they go and engage in some sort of QE4 program or anything else? I don't know. But they would have to then keep their balance sheet of 4.5 trillion. So we'll see. We'll see where that's going to happen. Interest rates are basically rock bottom. I don't know what they're going to do about that, but people are ultimately going to lose out. That's what I see anyway.
Now, since Trump came into office, it's been a year now, and the corporate media and everyone is out there, telling us how great the economy is, the stock market's going up. Actually, most of the people look at the stock market, but when you look at the economy, is everything as good as they're saying? Is the economy actually really strong? Because has anything really changed? Has anything really improved? Has anything really been done to make the economy a lot better in 1 year?
No. Ultimately, no. I've seen some positive things. There's no doubt about that coming out, or at least down in the horizon, some activities that we've seen. But ultimately, no. What we can see is that, look at perfect example, Manhattan, San Francisco, other big areas that are seeing the most extreme of the situation. People that are working for these major corporations, they live in cities that are overpopulated, and they are unable to afford their living there. They maybe can rent out the most ridiculous living spaces. You've seen them before, little tiny, basically coffins, and that isn't a good sign for the economy. You're telling me the economy is good because the housing is very expensive, but then the average person can't live there, can't work there. What are they going to do? So we have a big problem that's going on right now. Look at unemployment. they're showing us that the rate is under 5%, but the statistics, the way they calculate it, hasn't changed over the last year. So I don't believe it. I didn't believe it then, don't believe it now. The economy is not doing well. It's going to take a lot more than 1 year to get it going. So we're seeing right now with all the policies that have been put into place are really similar and they're consistent. It is to strangle the average person and make sure they're unable to get out of debt. They want to make sure people are in the maximum amount of debt because then you can control them. Debt is the system of control created by the central bankers, and they will make sure to use that force on us all the time. The average person right now, their household disposable income, and you take that, there's very little remaining at the end of the month. Very, very little. You look at it nationally, you look at it basically any state, you're going to see the same situation. And then you see what the prices are of things. They just keep rising. Electricity keeps rising, food keeps rising. I mean, it depends on the area, it depends on, a lot of specifics, but in general, we can make those generalizations. So people are month after month running into big trouble. Look at the student loans that are a very big problem. Look at the car loans. Everybody's been managing all of this. They've been looking at this and they know, but things are still going. So everyone says, look, stock market's up, we're doing fine. I for one, just don't believe that. I'm not going to be fooled by it simply because what we're being told on the television. There's a reason why they call it programming. They call it TV programming for a reason.
That is true. Never really thought of it that way. So do you see any black swans that could just rip the whole economy, the global economy apart? Do you see anything you've been researching, analyzing? Do you see anything that would do that?
What we could see is going on with, I don't want to say it because I know that YouTube doesn't like it, but, North Korea. And that right there would be obviously a big one. I don't know if anything is really serious coming out of there, but ultimately that is one big event that would occur. I also do believe that the interest rates are probably the biggest situation that we need to be watching. It's not going to end well if interest rates rise. I know that would be a very, very big problem for them. If they are to pull back on their balance sheets, what I've been researching is that $1 trillion worth is supposedly going to be basically reduced from the balance sheets of the global central banks. $1 trillion in 2018. If they do that, we're definitely going to have a big problem. I don't necessarily think it's going to be a global stock market crash, but that is one factor right there. If they go ahead as planned, that's their plan. I mean, they could go further than that. They can go, less than that. I don't know, but that's their plan. $1 trillion in 2018. That's a big factor. And just seeing the way that the people of the world are just fighting. I mean, just look at what's happening in Europe. We are seeing a complete destruction of everything that's happening there. I mean, it's really looking bad in every sense of the word. I mean, just look what's happening to North Africa and the Middle East and everything, and that's spreading. It's spreading. You're seeing that happening, and it's not going to change anytime soon. You're going to see it getting worse. And I visited there myself. I know in Europe, and I know you can see that things aren't well. Things aren't doing well right now. Talking with people that are there in Spain, a friend there, he's telling me about the situation. Youth unemployment so high, and everything we've seen in the news, he confirmed that for me. And he's living there in that region. He knows it. He's definitely been experiencing it himself. The situation is not going to get better. It's going to get worse, and the economy around the world is hurting. But don't worry, central banks will be there to buy up the shares to make sure. The reason they're buying up the shares is not to help the little guy, but of course they're doing so to siphon wealth away from the little guy and move it into the institutional investors and the elite and everybody else. I do believe, of course, that there will be a major deflation that occurs intentionally at some point, and that will crush everyone, and then they're going to buy things up for pennies on the dollar. You will see countries in Europe particularly that will have to give up their assets. Look at what Greece did. They gave up islands, they gave up infrastructure, airports, so much because they're in debt. So that's what's happening. Debt, the average person says, I don't care about my debt. I don't have to worry about national debt. We owe it to ourselves, all this silliness. But look at what happened in Greece. They had to sell off their assets. Look at what's happened, in so many countries. Oh, you're in debt? Don't worry. Let us put an oil well right here and we'll take care of you. And so they steal the assets of that particular country, but they put them into that situation in the first place. It's all part of a grand plan, and it's going ahead perfectly.
Dave, thank you very much for being on the X22 Report Spotlight. How can people see your work?
If you go over to YouTube, type in the Money GPS, you will see me from there, and that will take you, you'll see my website and all that stuff. But the Money GPS on YouTube is definitely the place to see me.
Dave, once again, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Thank you very much.
Thank you for having me on.